Happy Thanksgiving, guys. Welcome back to the channel. There are some important things we have to go over revolving around AMC stock. We just got the exchange reported short interest data that proves the Ortex estimates are very inaccurate. So we're going to go over that. We're going to go over Longeveron, another stock that went from $3 to $45 that is setting up the same way that AMC is currently setting up. The volume is key with this whole movement. We have seen a lot of traders that have exited the stock over the last 6 months. If you're watching this video, I guarantee you're not in this just for a short-term couple of day trade to make a couple of dollars in the stock. You're more than likely in this for the moass, and big congratulations to you guys. Patience does pay. So let's get into this video. There's a lot to cover. I don't want to waste too much time with the intro. Hit that like button for me, consider subscribing to the channel, and check out the links in the description to get free stock. If you want a free share of Lucid Motors, sign up with Moo. Link in the description. You'll get that free stock when you deposit $100 to fund your portfolio. You will also get one other free share just for opening your account. Now, before we get into any of the data, the exchange reported short interest, all of that good stuff, let's go over how volume is key. And I know you guys are sick of hearing about the volume, but I want to put this into another perspective. So over the past 6 months, like I said, we had a lot of traders. We had a lot of people that were buying and holding the stock. As those traders exited, we seen those shares available to be traded. As the hodlers, the people that are just diamond handing, buying the stock whenever they get paid, whatever the case is, however often they buy the stock, they have been accumulating more of those shares that were sold by the traders. Now we're seeing incredibly low volume because we own so much of the company. And how this works, we are restricting the amount of shares that are freely available to be traded by simply buying and holding, but also mainly holding this stock. So you guys can think about this, and the best way to actually put this into perspective is taking this stock Longeveron. This was a stock, and I imagine this part right here where you've seen this incredibly low volume is what we are seeing with AMC. They only seen a couple 100,000 shares, sometimes 39,000 shares that were traded on any given day. There was no hype in this stock. These were people that were buying and holding onto the stock, and this stock was in the range of $3 per share, $3 to $4 per share, higher end about $5 per share. Point is, there was no traders in this stock, and there was only 3 million shares to begin with, so there was not a lot of shares outstanding to even be traded. Now, once you start to get good news, you start to see hype come into the stock. That's where you start to see the volume come into the stock, and you start to see massive movements in the stock price due to the fact the float was so small, only 3 million shares. And that is what has effectively happened with AMC since we've been buying and holding the stock for so long. Once we get that hype, once we get those traders that come back into the stock that want to buy more shares, and there is very little shares available, that's where you see the big price movement increases to the upside. And that's not even including shorts covering, that's not including the option activity. I'm just talking about traders that will come back into the stock, because at the current moment, and why I'm saying you're likely not a trader if you're watching this video, is because AMC has been moving up or down 0.5% on any given day, when these other stocks like Longeveron just went up 145.5% here on Wednesday. There's a lot better trading opportunities in the marketplace than AMC at the current moment. So there's a lot to be excited about. I hope you guys are just as excited as me, and you're waiting for this volume to come into the stock. Right now, in my personal opinion, is not the time to be selling AMC, but as always, do what you guys want to do. So that is key about the volume. I wanted to put this in the most condensed, most understandable way possible. There is simply less shares now available to be traded than we have ever seen with AMC stock, and I think that's something a lot of people don't cover in other videos. So feel free to share this if you do find this insightful. Now, let's go over the data that you guys need to know, and let's start off with the Ortex data, because we did get the exchange reported short interest information for AMC last night and this came in at 17.05%. This is 2% higher than the current short interest estimate from Ortex, which is 15.25%. And we do have 87.46 million shares that were sold short, but the settlement date was November 15th. And if we come to November 15th, we can see, let's pull it up. We can see right here that the high for the day was $44.43, and we opened at $40.36. So we went up almost 7% on the day, and we have since fallen from $44 now down to where we are currently at about almost $39 per share. So I do think that short interest is back up to this 18-19% level, but we did have a days to cover of 2.07. This is as well incredibly bullish. Share utilization is at 74.79%. This has been relatively volatile lately, going up, going down, just because I think there is less shares available to be traded, and that's what the share utilization is. The number of, or the percentage of shares that are currently lent out compared to the amount of shares that are available to be lent out. So if there's less shares that are freely tradable, the share utilization is going to be a lot more volatile because there's just less shares available to be lent out in general. Now, that's what really you guys need to know. Keep in mind, Ortex estimates not very accurate. These are the more accurate numbers to go off of. 17%. I would estimate 18-19% is more reasonable. Now, the Stocko Tracker data, this is very key to know as well. When you are restricting the flow, it doesn't take a lot of market maker hedging to cause the stock to go up, and really that goes for any kind of buying power or selling power as well. It doesn't take a lot to move the stock around. And for December 17th, you're going to see a lot of these weekly expirations head over to the December and the January contracts, and we're already looking at 28,000 calls that are in the money. That controls about 2.8 million shares that will have to be bought. Out of the money calls, 232,157. That controls about 23 million shares that have to be hedged for. And right here, about 30 million shares that have to be hedged for at the January 21st, 2022 expiration when that comes around. For January, already looking at 126,582 calls that are currently in the money. So some very, very high numbers as far as options are concerned. And I do think these are going to continue to grow until we get down to that week of expiration. And you're going to see a lot of volatility, big moves to the upside and to the downside. As long as you guys hold your conviction, you continue to hold on to your shares, you will do your small part collectively to make the moass happen. And that is very, very exciting. Now, on top of that, some market things to keep in mind is there's a lot of COVID headlines, COVID lockdowns. Take a look at this headline right here. Merkel's push for German lockdown reportedly blocked as death toll passes 100,000. That is not a good thing to be seeing these lockdowns, to be seeing these kind of cases like that. That's not necessarily the case in America, but you could see sell-offs in the market due to these other countries and what is going on with their situations. As well as that, another headline right here, a record number of Americans say they won't be buying holiday gifts this year, which is obviously not good for the Santa Claus rally, because the Santa Claus rally plays into a lot of things, but a key thing is that people are spending more money than ever by buying all of these holiday gifts. That leads into more profits for companies, higher expectations, all of that stuff. So that is basically the scope here. Some negatives for the overall markets to watch for, like I said, COVID. But when it comes down to AMC, I don't think it matters as much. And this is really what matters is the low volume. That is key. We know shorts have not covered. We are sitting in this very, very tight range, waiting for this volume to come back into the stock, and we do have still very elevated number of contracts that are being bought and sold on any given expiration, specifically those monthly expirations. So it's going to be volatile over the next couple of months. I think you're going to see some massive gains, but I'm not a financial advisor. I'm not a financial planner, and always come to your own conclusions and your own opinions. But that is going to be all for this video. Enjoy your Thanksgiving. Love and appreciate you guys. Thank you for watching this video. Thank you for keeping it positive. The last thing we need in the community is going to be division. So that is going to be all. I will see you guys in the next video.